Good morning, everybody, and welcome to this week's Talk Forex. I'd like to thank everybody for joining us this morning, and FX Street for obviously putting this on and all of the other wonderful videos that they put on each and every day. I'd like to apologize for last week. Obviously, we wanted to come to you last week, but there were some technical difficulties. So we were not able to come on air on this hangout right here and be able to broadcast to you. But hopefully you had a good week in the markets and you're ready and raring to go for the week ahead. This show is Talk Forex, where we do some live trading and analysis with myself, Alex Ong. Before we get started, it's very, very important we go through the disclaimer, which is to say that the content of this webinar is not investment advice and should be used purely for educational purposes only. All participants are advised to seek their own counsel prior to investing or entering into any trade. Spread betting and any other type of financial trading carries a high level of risk to your capital with the possibility of losing considerably more than your initial investment. The content of this webinar may not be suitable for all investors, and an individual should ensure that they're fully aware of the risks involved. And if necessary, you should seek the advice of an independent financial advisor. These sessions are interactive, so please, if you do have a question, please feel free to post it in the chat box. I will keep an eye on that at all times. So if you've got any questions, if you've got any particular pairs that you'd like us to look through, then please feel free to post it in the chat box. In these sessions, we do go through as many Forex pairs as we can, but I look at sort of maybe 28 to 30 of them. So it's depending on what we're talking about and how much detail there is in a particular chart, it will be difficult to get through all of them. Therefore, if you do have anything in particular you'd like to look at, please let me know, and obviously we can make sure that we get those in. So these sessions right here are live analysis sessions, as I just said. Basically, let me share my screen. I just realized I was giving you that whole presentation on a lovely PowerPoint, and I wasn't sharing the screen. Fantastic. I'm sharing the screen now. Is everybody able to see my screen? So you missed my pretty presentation, and now we're right here with the chart. So hopefully you can see everything now. Okay, so as I said, what we're going to be doing and what we do with all of these sessions is basically we go over the various different charts, and we do some analysis and see what's setting up for us for this week or for the day. And basically what we're trying to do is show you how we approach the markets. Okay, so how do we go about trading the markets? And what we'll do, that will hopefully do is help you guys also learn a little bit about trading. Now, my brother and I have various different strategies. We trade using technical analysis, we trade using fundamental analysis, and actually more often than not we use a combination of both. But we don't want to overcomplicate these sessions here. The point of it is we're trying to help new traders or struggling traders really just find a consistent approach that makes money. So we're not going to overcomplicate things. We're going to trade basically using pure price action on these webinars right here, which is kind of like a very easy foundation place for new traders to start or for struggling traders to go back to. Okay. All right. So with that in mind, let's start going through the pairs. We're going to start looking at the Aussie CAD. Now, the Aussie CAD, if we look at it, the first thing we want to do when we're analyzing a pair is we want to get an idea as to which direction is it moving in. And what I do to do that is I have kind of like these lines in the sand, right? And what they are is horizontal lines of support and resistance that just let me know whether the chart is overall sort of bearish or bullish, and whether the trade setup that I'm looking at that particular moment in time, whether it warrants, it justifies a trade to the upside, for example, or whether it justifies a trade to the downside. Now, you might be quite confused in that sense and saying, well, if the chart is bullish, and surely you should be buying, and if it's bearish, and surely you should be selling. That is true to an extent, but in fact, this is a great example here. But sometimes the chart, the overall picture could be a bullish picture, but the price action at that particular moment in time is actually bearish. Okay, So the first thing I do is draw in some support and resistance lines just to understand what sort of like the context of the chart that we're trading in. So the most recent ones are the ones that we'll pay attention to first. So we would say that these particular support and resistance lines here on the daily charts, if I zoom in there for you, are going to be the most relevant to us. So now let's talk about the direction. We're looking at this overall chart. We can see that the market is sort of moving upwards. We've got ultimate higher highs over here, okay, and higher lows. So higher low here, higher low here, higher low here. So we can say that the chart is moving upwards. All right. So overall, we would say that this is a bullish chart. I mean, really, it's more sort of range bound, but from a complete technical picture, it's moving upwards. Then we want to say, well, which way do we want to trade right now? Which way is going to provide us with the highest probability trade setup? And for that, we then need to go into the more recent price action and see how the price has reacted to the levels that we've drawn in, the horizontal support and resistance levels. And what we can see here, okay, so we've got a level here, a level here, a level here, and a level here. So these are our four major levels right now, okay? Now, if the price broke above this level and it was somewhere in the middle of this range over here, we would say that we're quite bullish. We think the price is going to move towards the top of this range and towards these highs. But what actually happened last week is we can see that the market broke above here. It gave an attempt to move above those highs. But look at what happens. We've got a massive bearish engulfing candle over here, all right, that completely encapsulates all of this price action on this price bar over here. So from that perspective, I would then say, and the price is now beneath this level right now. So then from that perspective, I would actually say that we're actually relatively bearish on this pair. So then we need to look for some sort of an entry. And how do we do that? So we'll drop down to a lower time frame, okay? You could drop down to the 4 hour, the hour, the 15 minutes. We're not seeing any price action at the moment on the hourly time frame. So I'm going to go down to the 15-minute time frame. And over here, it's looking a little clearer, okay? So from that perspective, on this pair right here, I would say that the price is below this level. As long as it holds below this level, and if it then breaks beneath this area here, so breaks beneath that support and resistance level, which I'll put in just here for the moment, at 1.01403, I will then be looking to take the short opportunity. Okay, and one of the fantastic things about this way of trading is that we don't need to get a massive move in the markets to be able to make money. Taking into account the fact that we are at this level, we're just beneath this level here, okay, I would place my stop just above the level and above this high over here at 1.0170. And that's me saying, well, if the market were to get me into the trade over here and then turn around and break back up above this level, that's a bullish time for me. And I would imagine that the markets are going to then go and rally and trade towards the highs over here that we just spoke about. But as I was saying, we're not looking for anything magical to happen to be able to make money. So if we were to go and zoom out here, and let's say zoom out to the daily chart, we're only looking for the price, all right? And we'll go back to the 15-minute chart in a minute so that I can show you. But we're only looking for the price to come down to this level here at the 1.0104. Okay, just around that level there. Now look at this price action. Okay, look at all of this chart over here. We're saying that initially we only want the market to come down to these lows here. And as you can probably see, that's not a very big move at all. So we're not expecting anything extraordinary from the markets to make money. Now, why are we picking this level? Let's go back to the 15-minute chart. Because that level is a low here from this recent swing up. The swing up is to this level at the 1.0164. If we get a break of that level down there, then we're looking for it to move to the 1.0100, more or less. So what is that? That's kind of like a 40 pip trade, roughly. All right, so you've got to allow for the spread, but 40 pips worth of profit. And where will our stop go? Just above there at 70. So for a 30 pip stop, 40 pip profit, we've got a nice positive risk reward trade on our hands over there. And also, if the market starts to move sideways, we probably won't come out at this level anyway. We will come out a lot sooner than that. Okay, so do you see how trading this way, using price action, using price bias analysis, you're able to determine, first of all, which way you want to trade, and then you're able to identify high probability setups where you're not expecting the markets to do anything significant at all in order for you to be able to make money. Now, because our target is down here, it doesn't mean that if the market, absolutely falls through the floor in this pair, then we won't hold it and we won't wait for a bigger move, or at least kind of move our stop and trail our stop behind. We can do that, and therefore we'll be getting an even more positive risk reward trade. But what we're saying is that in the very initial early stages of this particular trade, we're going to get in here, we're going to have our stop above here, and we're going to be targeting the lows there. Then we will wait to see how the trade kind of materializes, all right, how it starts to play out, and judge and make our decisions based on that. So from the Aussie CAD perspective this morning, we're going to be looking for a short. Looking at the Aussie franc, remember, first thing we're going to do is let's zoom out a little bit and let's get in all of our support and resistance lines. So one, we can see the overall picture of the market. And secondly, we can figure out which direction we want to be trading in. Okay. So looking at where the price is right now, right, we've got, oops, that's wrong. So it's a little bit further up there, like so. So the price is now, okay, it's rejected this high over here. So it broke out above that high and it closed beneath that high there. And since then, it's kind of been selling off a little bit. We would say that overall we have an uptrend here. So if we take a look at this, the market is making higher lows, not necessarily higher highs. It's been capped by this, but higher lows are then just an ultimate higher high over here. All right, so we would say, let's get rid of that the market is in an uptrend. However, we would say that the price bias for that particular moment in time is actually to the downside because we've just rejected this level here. So we're going to be looking for an opportunity to sell the markets. How do we do that? Let's jump down to a shorter time frame. If we were to look at the 15-minute chart, for example, or even see if we can see it on the hour chart. So on the hour charts, we can see that we're starting to have a little bit of a congestion zone being printed at these levels here. So over there. Okay, so from 0.7634 to 0.7665, the market is moving sideways. And what's more important is the level that it's moving sideways at. It's moving sideways at this. We go over to the daily charts. This middle line here, okay, are all of these highs. It's kind of encapsulating all of this resistance level over here. So we've got this sort of price zone between, well, where we put in our congestion zone, where the market is gyrating. All right, at the moment, it's going back and forth, back and forth. And what's important is it is at a key level, so a key resistance level. What we would like to see with this pair is for the market to now break down. Okay, and why break down? Because the previous price action, so the sentiment, if we look at the daily chart, is to the downside. We're not saying that the trend is going to change, but we think the market's going to pull back somewhat. So if the market can break down from here, it will be in line with where the price bias is for that particular moment in time. We're at a level of support and resistance, which the markets are clearly paying attention to right now. So that would then spell a very high probability trade for us. Okay, any questions? So Aussie CAD, Aussie franc, we're looking to go short on. Aussie yen. Again, let's do the same thing again and again and again. And why are we doing this again and again? Because we want to have some consistency in our approach. Okay, we want to make money, ultimately. That's what we need to do as traders. And what we're trying to do with everybody watching these webinars over here is to give you a consistent approach that can make you money. And something that's not complicated at all. All we're using are a bunch of lines. All right, we're going back to kind of like the good old days when actually I wasn't alive, and people used to chart things on pieces of paper and rulers. You know, we could do this with with this approach right here. It's simple, but it works and it's effective. So Aussie yen, first thing we need to do, let's put in our lines. We understand where the market is going. So we've got these highs over here. Right, that's the ultimate high there. This one on the right. Let me zoom in. But the reason that I'm not using that as a high right now is at the moment this is just a reaction to this level. This is an actual high right here. This is a reaction to this previous high here. So this kind of gives me an idea of where the price is going to. Now, let's put in our other levels. So we have this level over here, this high over here, this low down here. And we've got this area here that the price is currently playing with. So from a sort of a longer term perspective, you would have to say that the market is moving up. Overall, the bias is to the upside. However, we've got a little bit of a pullback right now. So if we were then to go and look for a trade, what way would we be looking to trade on? So let's go down to the shorter term time frame. And what we can see here is this is that high that I said was a reaction to this. I'll go back a little bit more. So this high over here. So over here, you can see that the market reacted to this level, and then it's come back to that level, right? As you can see there, it's come back to that level. It reacted to it, broke through it, and it couldn't hold above it. Now, this is key. You see, as traders, what we're looking to do is we're looking to take advantage of what the bigger players are doing, what the bigger money's doing, because ultimately we don't have accounts that are large enough to move the Forex markets. So what we need to do is we need to try and figure out what the bigger players are doing. Now, at key levels, all right, there's going to be a bunch of stops hidden behind key levels. So what you would expect when a market breaks above a key level, if it's a true breakout, is you would expect it to roar off into the distance and not come back and break back beneath the level, because, all right, you will have a bunch of stops above these levels. Now, everybody that was looking to sell the market, everybody that was short, to get out, they need to do what? They need to buy, right? So if they start buying above this level here, that's creating demand above this level here. You would also have the people, sort of like the trend traders, that are waiting to trade the breakout, and they'll wait for the highs to be broken. So you not only have the people that were short here, you will have the people that are looking to get long over here. So you have a whole cluster of buy orders above this level here. And what that will mean is that you'll have a certain amount of demand for the currency, which will push the currency all the way up. Now, if it doesn't do that, if we don't get that sort of reaction, and if instead what we get is the market close back beneath the level, that's telling us something. That's telling us that actually the market isn't ready, okay, to break out above this level here. The bigger money is actually on the sell side of the markets. How do we know that? Because all of these buy orders that would be clustered above this level here have been consumed by somebody. Right, somebody above this level here has consumed, or an institution or a group of institutions have consumed all of the liquidity above this level here and still managed to push it back down. Right, so what we're doing as traders is that we can't be right on every trade, but what we can do is we can build up clues. We can look at the overall story of the market, right, to build up a picture as to what we feel the bigger traders may be doing. Now, if we don't have any, if we don't have any momentum move above this level here, we have to come to the conclusion that actually the bigger money wants the market to go short. And it's proved that by being able to make it close beneath that level there. Would we have been able to take this trade here? Not on the 1 hour charts. right? Maybe if you looked at a daily chart or something like that, but there's no price action here, which is the next key. We don't just take a trade because it's at the level. We take a trade because we're looking for the right price action. So fast forwarding to the current market that we're currently in, I would say that our price bias is to the downside. The market went up to that high again. It got rejected from that high again. It's now playing with this level here. So how do we trade this level? Well, we've got this sort of congestion zone here. So we could say, let's wait for a breakout of the congestion zone. When we do that, we would then have, if we were to come down to the next level there, which we don't particularly want to do. We want to be able to get our money before it's even got to halfway through the level. But if we got down to that level there, we'd have a nice 2-to-1 risk reward trade on our hands. What ideally I would like is to see the market move along this level over here a little bit more. Okay, giving us more of a recent consolidation zone that we can then sell through. But if that doesn't occur, then at the moment, we've got this to contend with. We'll have our stop above the highs there, and we'll be selling beneath the lows. Okay, beneath these lows over here. Moving on to the Aussie New Zealand. So the Aussie New Zealand. Let's put in our levels. Okay, we've got this high over here. So we can see the market's reacted to it. We've got a high up here. All right, so we've got a couple of levels. And on the downside, if we were to break down, we've got this low over here and this low here. Then we've got this ultimate one down there, but we're not anywhere near that at the moment, so we don't need to put that in or onto our charts. So again, let's see. Overall chart perspective, well, the market's just broken out above that level there. We were in a consolidation zone, but now we would have to say that we're in the beginning of an uptrend. Okay, price bias perspective. If we go and look at this on the 1-hour chart, we're also out above that level. So we would have to say, as long as we hold above this level here, we're going to be bullish on the markets. So in contrast to what we saw with the Aussie CAD and the Aussie franc and the Aussie yen, where we were kind of a little bit bearish because they were beneath the levels, with the Aussie New Zealand here, actually we're holding above the level. So that could be a nice little hedge. If we were to go short one of the other pairs, we could go long this pair. So if any sort of like a massive catastrophe were to happen, you would be hedged. But you could still make money. It's not like you're going long and short in the same pair. These, even though they're semi-correlated, they still will make their own price movements. You can still make money. You're just taking some of the risk out of the market. So above this level over here, at the moment, from a price action perspective, there is no real setup. Okay, so what we'll be waiting for is some sort of a consolidation above this level here. What we don't want to happen under any circumstances is for the market to close and start trading. Well, it's not we don't want it. If it happens, and we'll start selling the market. But from where we are right now, looking for a buy opportunity, we need the market to hold above this level right here. Okay, so we'll see how this plays out. At the moment, there's no setup. That's ultimately what our bias is right now. Okay, what we call this is, obviously we're trading price action over here, but what the term that we have for it in-house and what we teach our community, we call it price bias trading. Okay, so it's kind of like a term that we've coined. It's our evolution of price action trading, or the way that we teach price action trading. So if you want to know what we call this strategy, you call it price bias trading. Okay. Australian dollar. What are you doing today? Now, the only other thing to remember about trading these pairs right here, okay, is that we have, and indeed for any pair, is that you need to look at what the news is for the coming week. And what we have coming out this week is the RBA interest rate announcement this evening or morning, early morning time from a UK perspective. So if we do get involved in these trades, we just need to be wary of the fact that we perhaps don't want to be holding it overnight, because we've got an interest rate announcement coming out overnight. And as you know, those announcements, you get a lot of volatility. You don't want to be whipped out. All right. So just bear that in mind. Okay. So let's look at this trade here. Where do we want to be? So we've got a high there for sure. A high's over here, but it's kind of, well, we'll put it in anyway. So this is the most important high. Then we've got lows around this area here. So this is a low that the market then came up to and treated it as resistance. Another support level. So what we're doing here is we're just identifying the support and resistance level. So it gives us a bit of context around what we're trying to trade. So overall, this particular market, what were we saying? Well, if we zoom out far enough, we would say that obviously it's moving down. If we look at the past year or so's price action, you wouldn't be able to say anything other than the fact that, well, this is moving sideways. So which way do we want to trade? Well, at the moment, we can see the market's gone from the bottom of this range towards the top of this range. But we're holding above this level over here. So this is what we really mean when we're talking about price bias trading. Now, which way do we want to trade in? Well, as long as the market holds above this level over here, we want to be trading to the upside. We're bullish. If we were up around this level over here, so in this same zone over here, then we would be looking for short opportunities. So you kind of need to look at where the price is in comparison to the most recent support or resistance level. Right now, if the market were to break beneath this level, then we would have no issue shorting it down towards these lows over here. But at the moment, it's obviously reacting to this area over here, and it's holding above that level. So therefore, we're going to wait to see how the price plays out. If we go into our 16-minute chart, there's no real price action here at the moment. We would want to see the market come down to this level and either give us a 1, 2, 3 reversal or break through it, in which case we can take the trade to the downside. So at the moment, the best we can do is say that we're bullish on this pair for the moment, but there is no current trading setup. So we move on. CAD franc. Again, first thing, let's put in our lines. So we have this. That's a high. And we're only looking for the most obvious levels, right? We're not going to try and trade every level that moves because that would be silly. That's a high. Kind of a low around that area there. That's a spike low, so I'm not interested so much in that. And then we've got a low here, and if the price gets down there, then we can see how we feel about these other lows. So I'll just put it in very quickly. Over there. So which way do we want to be trading? Well, this one's a bit of a tough one because we don't have any real levels in the middle here, not on the daily time frame anyway. We would say that ultimately the market is moving sideways. Okay, but it's moving down towards the middle of this range, which is kind of like a neutral area. You don't really want to be a buyer. You don't really want to be a seller at this area over here, unless you take a very short-term trade. But how can we start to develop a bias at this level? Well, we can go down to a shorter-term time frame. We can go down to the 4-hour time frame, and again look at some shorter-term support and resistance levels to give us an idea. And that would be this one over here. Okay, so we've got this is sort of like a pivotal level here. Every time the market comes to it, it reacts to it in some way. So it's broken through it, broke back down, broke through it, then broke back up, broke through it, broke back up. We're at that level again now. So what we want to do here is we want to see how the price reacts to this level. So we've identified it on the 4-hour chart. So it's not going to be as strong as one on the daily chart, but we can see that we're beneath this level. So what we would like to see is for the market to kind of play with this level right here. We don't want it to go just yet because there's no price action set up yet. You can see it's just kind of broken through the level, moving sideways a little bit. We want to see an actual price action set up for us to get into a trade, right? The chart string is extremely weak. Oh, hey, Raman, how are you? The chart screen is extremely weak. What do you mean that you can't see it, or you're just talking generally about the price action? Hopefully you can see it. If not, it might be because I'm broadcasting on like a 4K resolution screen, which may mean that in the future I need to get out a lower resolution monitor just to be able to do these presentations here. But I like these screens here because you get to see a lot of price action. Screen is not at all clear. Okay, perfect. So I can't do anything about that right now. But for the next one, I will bring out a lower resolution screen. Okay? Okay, let me zoom in to try and make things a little bit clearer. I think the problem is the resolution's very high. So yes. But next week I've got older monitors. I'll bring out an older monitor and hopefully that will be better. And as FX is saying, you can actually change the quality by clicking the gear icon on the video. So you should be able to change the quality. Okay, in the recordings. All right, so CAD Franc, we are also bearish on that. Okay, now moving on to the CAD Yen. So I zoom out anyway, just so I can kind of get an idea as to what the price action is, and then we can zoom in once we understand where all of our levels are. So the levels here would be so this is a bit of an untidy chart, to be honest with you. Looking at something like this, I'm not the greatest fan of, so I'm probably just going to skip this chart right here, because you don't want to be trading something that you have no point of reference. It's very, very difficult to trade like that, and I feel like this one here we don't have that, so I'm going to move on. Swissy franc. So what about the Swissy franc? Again, we've got some levels to be playing with, but it's kind of, let's put that in there. There's not a great deal. Can we zoom out a bit more? Aha. Aha. So we've got a little bit to play with here. At the moment, you'd have to say that the price is overall moving up. Okay, definitely in an uptrend. We've reacted to this level over here. So it broke beneath this level, then broke back up above it, and it's currently in the middle of that, well, just towards the middle of that range there. Looking for an entry, you would have to see well, there's no real entry on this chart here. There's nowhere that I would love to be trading from. The best I could do is say that I am bullish on this pair, but at the moment, there's no setup. So I just need to move on to the next trade. And by the way, now that I've zoomed into the charts, is this making it any better for you? Hopefully it is. And then I don't have to have a separate screen for these webinars. But if it isn't, then next week, obviously, we will get a separate screen. Okay, daily Euro Aussie daily chart. Let's put in the big levels and then we can zoom in. So big level up there, 1. This is 1. This is 1. Nowhere near the price, by the way. Let's try and get closer to the price. And this is 1 down here. Again, there's no real setup at the moment. If the price were to get back to this level here, then we could be looking to take a short. What I'd like you to look at is the way that the price does react to these levels over and over and over again. Right? So this is a level that we went back to ages ago. Okay, and it's come back to this level over here. It's broken through the level, broken back up above. And then we get a 1, 2, 3 reversal. You could have then entered on a break of this level here at 1.3763 with your level, with your stop below 1.3621. And then you would be looking for kind of for the market to trade up towards the middle of the range initially for your profit targets. And then obviously if the market broke through there, which you can see that it did, then you'd be able to hold it if you like. That's not what I didn't actually trade this pair here, but it's not what I would have done. As soon as I started to see the market pull back, I would have taken my profits. That's just the way I am. So looking at it right now, though, which way do I want to be trading? Well, we're moving up towards that previous structure level, which you can probably see if we zoom out. So the market came down to this level, treated it as support, broke through it. It's coming back up to it again now. If we can get a reaction to this level over here, then we will be certainly taking this short. And what sort of a reaction are we looking at? We'd be looking for a 1, 2, 3 reversal. So for the market to get up to this area here, kind of very similar to what happened down here. So it breaks down, pulls up, breaks down again, and then breaks through this level. All right. And why do we trade those particular types of chart patterns? Because they're technical trend reversals. Right? An uptrend is a series of higher highs and higher lows. A downtrend is a series of lower highs and lower lows. So what happens with a 1, 2, 3 reversal is that you get the market. So this is a reversal to the upside, right? The market's moving down. It's making lower lows and lower highs all the way down here. It then gets down to this area. It prints a low. It comes up. It prints a high. It then goes down to sell beneath that level. But there aren't enough sellers in the market to get down to where it was previously, let alone break through that level. So then this low over here is higher than this previous low over here. Right? So what we have at that particular moment in time is we've got 2 higher lows. What we then need to have a technical trend reversal is we then need the market to then break through the high, because then we would have a series of higher lows and a series of higher highs. So as soon as the market breaks this high over here, that's exactly what you have, right? So that's why we look for those types of trend reversals, okay? Those types of price action setups. Okay, we're running out of time. I've got about 4 minutes left. Can we look at all of the majors? I doubt we'll be able to look at all of them. But whilst we're on the euros, let's at least look at the euro dollar, and perhaps we can get in there and look at the pound dollar as well. So euro dollar. I mean, from a fundamental perspective, not that we care about it on this webinar right here, fundamental perspective, we think this goes lower. Technically, let's take a look. So technically, we've got this high here. got that low there. And the problem is that we've got to go way, way, way back to when the euro first came into play to find any levels. And even then, kind of playing with no man's territory. So at the moment, I would say that taking into account that the price is above this level here, you have to be bullish. You have to say that you think the market's going to move up. At least the very next move is going to move up. From a price action perspective and from an entry perspective, there is no real sort of entry there. What you probably would want to see, I mean, hold on. You'd actually just be forcing it if you were to take a trade here. But what would be nice to see if you were determined to take a trade on this is that we have the midpoint of this range here. See the market get up towards this level here and kind of start to move sideways, which you'd probably see on a 15-minute chart. And then take a trade on the 15-minute chart to the upside once the market gets above that level. At the moment, I'm forcing it. There's kind of sod all that I would look to trade on there. There are way better setups out there at the moment. Okay, pound dollar. Pound dollar. And I think, people, this is going to be the last one we get to look at today, I'm afraid. So, again, the problem with some of these dollar pairs is that they're just kind of in the middle of nowhere at the moment. Wow, point of reference. The last time the pound was so weak. Thank you, my fellow countrymen, for Brexit. Look at what you've done to the pound. It's all your fault. Look at what you've done. Okay, these charts don't go back past 1993. So is that not just fantastic? I hope everybody that voted out really, really gets hit with their exchange rate when they go on holiday this year. Your fault, damn it. Yeah, so the pound is extremely weak right now. In terms of a trade, from the daily chart, if you didn't take the sell up here, you've kind of missed it. There's nothing really on for you right now. If we were to go into, let's say, you could trade very, very short-term price action by coming in here and posting along these support levels there a support line. And how would you trade that? Well, you'd look on the 1 hour chart for the price to get back up to that level. You can't trade here, because you trade here, you're chasing the price, right? That's just what you're doing. So you cannot trade there. But you could wait for the market to come back to this level. And when it pulls back to that level, then you could take the short trade. But right now, bias is definitely short. Definitely think this is going to go lower. In terms of taking a trade right now, there's nothing really on for us, I am afraid. Okay, so that brings us towards the end of this webinar today. I hope you all enjoyed it. Apologies if you can't see the screen. As I said, it's probably just to do with my monitors, the resolution of the monitors. Last time I did this, I did it from the laptop screen, which I thought would have been the same, because the MacBook Pros have the Retina display in a very high resolution, but perhaps not. So next time, I will do it from the MacBook. Okay. Hopefully, when you're looking at the recording, it will be a little bit more visible. But as I say, we live and learn. If obviously, if it isn't good enough even for the recordings, and we certainly will be going for the MacBook next time. I hope you enjoyed this. The live analysis sessions, live trade sessions. There's nothing that we look to. Nothing that's set up for us to trade in this session here, but hopefully it gives you a fantastic idea of how to approach the markets, how simple this is, how simple FX trading is, if you allow it to be. All right. If you want to make it super complex and throw 1,000,001 indicators on there, absolutely up to you, but it doesn't need to be that complex. You can make money with a ruler. You really, 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 really can. So thank you everybody for attending. Raman, thank you so much for your lovely comments. If anybody doesn't know who Raman is, she's a fantastic trader as well. She's got a website. Or is that Raymond? Oh, I think it's Raman. Anyway, look her up. Very, very good trader. Thank you everybody for joining. Otherwise, have a great week in the markets, and I'll speak to you on next week's Talk Forex. Take care now and have a good week's trading.